Hey, what's up, everybody? Good morning. Today's June 20th, 2017, and you're tuning in to howtoplaystock.com. My name's Kepley. In today's video, I just wanted to, have a quick discussion on a couple different topics, okay, when it comes to investing in the stock market. Now, the first one I want to talk about is, what's going to happen when the stock market does crash or corrects. Okay, because that's something that I've been having a lot of conversations with people about. And, here's the thing, nobody really knows. But there's something called a melt up, and then there's something called a meltdown. So in other words, are we going to get hyperinflation, or are we going to go through with a deflation? So those are the two scenarios that can happen in a market crash. And we've experienced both in history. And then what's really interesting, though, is the inflationary or melt up in a stock market isn't really felt or noticed as much as, say, a deflation or a stock market crash when your asset prices start going down. So it's not noticed as much. So, for instance, right now I think we're going through one as we speak, and it's a melt up. Let me give you a good example. The Dow Jones just hit another all-time high, for the first time. And if you look at where we were back in, I don't know the exact date because I don't have a chart in front of me. But if you go back, just say to like 1998, the Dow Jones, I believe, was right around like 1,200 points or something like that. And again, I'm probably off on that number because I don't have a chart in front of me, but just go back and look at it and look at what the Dow Jones was at, and then look at what it's priced at today, in points. So the Dow Jones today is around 21,300, maybe a little bit more than that. I don't know. I'll have to go back and look because I don't have these charts in front of me. But the point is, that's what I would consider a melt up. Okay, they're just hyperinflating the markets and raising all asset prices by printing money through the Federal Reserve, and that can continue for as long as they want. If you just go to Google, do a little research on this guy, Alan Greenspan, and he had a hearing back when he was chair of the Federal Reserve, and they asked him about what he can control through the Federal Reserve when it comes to monetary policy. This is what this man said. He said that they could control interest rates. They can print up as much money as they want, and that is not a problem. They can even raise the asset prices in stock markets, and take those to the moon if they want. What they cannot control, though, is the purchasing power of the US dollar. Okay? In other words, what he's talking about here is inflation. He cannot control how much money in your pocket. He cannot control what that money is going to buy. So the purchasing power of your US dollar, he cannot control that. And that's what you really have to look out for when it comes to a melt up, or when the Federal Reserve decides to print money into oblivion, is how are you going to maintain your purchasing power? All right, now the meltdown, we all know what happens there. All we have to look at is take a look at the 2008 financial crisis, and that gives you a good idea as to what happens in a meltdown. So your prices come down in value. Honestly, if I'm going to participate in a stock market crash, I would much prefer a meltdown as opposed to a melt up. All right, and if you disagree with me on that, that's fine. Go ahead and leave your comments in the description and tell me why you disagree. But with a deflation or a meltdown, yes, you're losing money on your stocks, but that's if you're participating. You don't have to participate. You can get out right now while we're at all-time highs and wait for this thing to come down, because you can jump back in and buy up assets for pennies on the dollar. So you can get yourself great discounts. That's what I like about deflation and playing a meltdown in the markets rather than a melt up. Okay, I honestly think that we're going to get a melt up rather than a meltdown. They're trying to raise interest rates right now, so it's going to be it'll be very interesting to see what happens, but I think we're going to get a melt up rather than a meltdown. Now, what can you do to protect yourself during a melt up or a meltdown and keep some of your purchasing power? Guys, there's really only three things: silver, gold, and cryptocurrencies. All right, now they're trying to push some law through legislation right now on cryptocurrencies that is going to hinder what people can do with it coming into the country. All right, and I believe it's if you got $10,000 worth of cryptocurrencies and you're coming into the country for, you know, whatever reason, they want access to your wallets, your USB drives, etc. And I haven't read the legislation, you know, and looked at the details of it, but it shows you that they're starting to get a little creeped out by these cryptocurrencies because they can't control them. And that's exactly why you want to probably put a little bit of money into that. I'm not saying put all your life earnings or anything like that into it, because you really don't know at the end of the day what's going to happen with this stuff and where it's going to go. Is it speculative? Absolutely. So only play with the amount of money that you can afford to lose on cryptocurrencies. Gold and silver, on the other hand, you want to get into these because, again, you know, they can manipulate the price through paper gold and paper silver, but they cannot control the actual physical silver itself. So if you have some in your hand, they really can't do anything about that. Okay, and those things, you know, dating back the last 5,000 years, have always been a way for you to preserve your wealth. Now, I had a conversation with my dad about this because he was asking me, you know, at an older age, what I think he should do. And for older folks who don't have a whole lot of time left when it comes to their life and living, I would, you know, recommend that get out at the top. Take your profits right now. Just get out of your 401k. I'm not telling people what they need to do. I'm just saying this is what I would do if I was at an older age, say of like 57 to 65. I'd be getting out right now in my 401k because you don't have to participate in this depression that's coming, or this melt up, which is hyperinflationary. Whichever way it goes, it doesn't matter. You don't have to participate in it. Get out at the top, take your profits right now. And then what I told my father was, you could take these profits and you can start preserving your wealth in other things. In other words, put your money into something where it's going to maintain its value. Gold and silver, for instance. Now, if they were to come out with like a new currency or a new financial system, more than likely you're going to have to back it by something like gold and silver, or a cryptocurrency of some sort. Okay, but the point is, what I'm trying to get at here is you can preserve your U.S. dollars in something that's going to maintain its value or go up in times of crisis, and then get out of your precious metals or whatever asset it is that's preserving your U.S. dollars for you. You can get out of those when things start calming down, and you can convert back into the new currency. All right, this is something that people have done for hundreds of years, and they make massive fortunes when this takes place. So those are just some things that you can do, and some things to consider when it comes to what is going to happen with the stock market here in, say, the next 8 months to a year. Nobody really knows. Okay, and we can't put a time frame on this because, you know, you can't predict the future. But what you can, if you do a little bit of math when it comes to interest rates, the national debt, demographic spending, and just demographics in general with retirees right now, if you just do the math on all that when it comes to the population, it's mathematical certainty it's going to have to happen here soon. Okay, we're going to either experience another run up in the stock market that could take us to 100,000 points, and then you're going to start seeing prices rise across all sectors of every industry, and it's going to get to the point where you're going, okay, what the hell's going on here? You know, a gallon of milk is costing me $8 now instead of, say, $3. It's going to be noticeable. So those are just some things that I had on my mind for today. Leave your comments in the video here if you like what you're hearing, or if you have any additional information that you want to share with us in regards to what you think is going to happen and what you're doing to prepare for this. Okay, hit the like button, go ahead and share it with other people, and remember guys, income is the outcome. All right, have a good day, and I will talk to you guys here soon.